Imagine making 500, 1,000, or even 2,000 a day in just a few hours. We're talking about no boss, no office, just you and the markets. Sounds unreal, right? Well, we do this every single day, and today we're about to show you how you can do the very same thing too. Scalping is the art of making quick profits in minutes. Listen, and you do this over and over again as a scalper. Now, I want you to understand that scalping is intense. Listen, it is really intense and it's really fast. But guess what? You clock insane profits when you do this thing right. So in this video, I'm about to break down to you how to scalp the market effectively, maximizing profits and limiting losses. By the way, if you're new to this trading space and you're new to this beautiful face, I'm Kerry and I'm about to take you to profit land with the best scalping strategies that you can employ this year in 2025 and beyond. So let's get right into it. All right, so before we get on the charts, I want to drop some scalping tips so that you're fully aware of, these 3 actual tips that can literally make your scalping better. And tip number 1 is basically to trade with a low spread broker. All right, so broker is important. A lot of individuals are scalping and they're using brokers with drastically high spreads, and that's not going to be good for you because it's going to cost you a lot of commission fees. So if you want like a broker which has really great spread, I've dropped my broker link in the description below. Now, tip number 2, the time you decide to trade. Now, this is really, really important. A lot of people want to trade when they want because they know the market is open right around the clock, right? But this is very important when you're scalping because volatility is important. Therefore, the best trading times for you are at the opening of the London session, anywhere between 8 a.m. to 10 a.m. UK time. At the start of the New York session, anywhere between 1:30 p.m. to 3:30 p.m. is good. And also at the Tokyo session, thereabout, anywhere between 1:30 a.m. to 3:30 a.m. And these are all within British Standard Time. So you can just change it over if you're in other countries to your time frame. Now, you also have to trade with a clear exit strategy. All right. Quick moves are what you're capturing. You're not in the market to live. You're going to be focusing on capturing 1 to 2 or 1 to 3 risk to reward because, if you're going to go in, make it worthwhile. All right. Now, you also have the ability to use tighter stop losses so that you can get bigger take profit levels. So you want to be strategic at your entries as well. So right now we're about to go on the charts and we're about to, look on the strategies that we can employ to scalp the market on a day-to-day basis. So let's get into strategy number 1. All right, all stars. So I'm gonna break down the 1-minute strategy. This can also be employed on the 5-minute as well. Same exact pattern. I'll basically be showing you the same thing on the 5-minute as well. So 1 minute, 5-minute, either of them can actually work. Now, what it is that you're looking for when you come on the charts is where is price currently. Now, as we can clearly see, this is where we are currently, right? This is where we are, right? This is where price is right at this moment. So we're looking for or high and or low at this area, right? That's really what we're looking for. Now, all you have to do is to get your horizontal lines and you can mark out, this is your low and you can mark out your high. Okay. All right, so that's what we've got here. Currently, we've got this as a high and we've got this as a low. So most likely we're actually on our way here. What we're looking for is what we call, very simple, a break and retest. Break and retest. And we get in on the retest. So very simple strategy. We can employ this on 5 minutes as well, right? This one is called the 1 minute breakout strategy. So we're looking for that breakout. And once we get that breakout, we're awaiting the retest. That's our entry to get in on the trade. So it's very simple. We either look for a breakout to the upside or a breakout to the downside, right? Whichever one we get. So we're not coming in the market with any preconceived bias. We're looking at what price is doing and we are reacting accordingly to it. That's it, right? That's really what trading is. So you allow the market to show you what it's doing and then you react according to what it is giving you. Okay, so we're on the charts, and this is literally the 8 a.m. for the London session thereabout. It's one of the optimum times for trading. So we're waiting to see if we can get an opportunity right at this area here. So we're patiently, waiting it out, sitting on our hands and waiting for, the perfect opportunity. Now, it's a simple breakout strategy, very simple. We're not overcomplicating. What we're doing once we get on the charts, we're marking out our high area and our low. And what we're looking for is a break of the high or a break of the low. So we're not imposing our bias on the market. We're allowing the market to do its thing and we react according to it. So we're setting our trap in, correlation to what the market is actually giving, right? Now, a lot of traders go wrong when they impose their bias on the market and then it doesn't go in their favor. So that is why we allow the market to do what it's doing and we react based on what it does. So that's why I said if we get a break of this area, I'll go in for a buy. If we get a break of this area, I'll go in for a sell. Most likely, we're going to get a break to the downside. And once we get that break and retest, the retest is our area for entry. And that's literally it. Okay, so what I'm really looking out for, based on the volume that I see here, I'm actually looking for a break of this area so that I could literally be taking, a quick move right there, right? Quick 1 to 2, 1 to 3, thereabouts, right? So let's really see if we get that break. Right, we're looking for the break. Oh, there we go. That's the break and retest. Okay, break, retest. You see we pulling back. So this is my cue to enter actually right here. So I'd be setting up a short position because this is a lot of volume right at this area here. And I'll be putting my stop thereabouts. So let me just do this so that we can, put our trade in motion to kind of get at least 1 to 2, 1 to 3, thereabouts. Okay. Right, there we go. All right, so that's what we're setting it up for. 1 to 3. So we're entering right there, giving ourselves that stop, and we're actually going to see how it plays out based on the fact that we got a break and retest. This is our entry, right? And let's see how it plays in our favor, right? If we could get some profits made on this one, right? There we go. Nice and easy. Perfect. We're out. We're out. Nice and easy. 3 times our risk on this one. Perfect. We're done. We've made profits. This is what you're looking for, right? Your 1 minute or your 5 minute, either one. but you're waiting on the optimum trading time, which is anywhere between 8 to 10 a.m. there about London time, especially in the 8 o'clock, time frame, there's generally good volume. All right. Now, if we look on later on throughout the day at 1:30 p.m. UK time on even gold, we'll realize that, the volatility is actually there. All right. But let's check out another pair. Let's see if we can go and check out, let me see, USD JPY. See if we can do UJ at like a New York session time thereabout. So anywhere between the one. So we're on UJ. This is a nice one. We're on UJ. And very clearly, I could take my rectangle here. And even if I just capture this bit, we've been consolidating. So we're running in a range, right? We're running in this range. Okay. So what we're waiting for is a breakout of the actual range. Once we get that, I would definitely be going for a position, right? I'd keep it a little bit snug to this. So if we get a pull here, because that's the most recent one, right? So what I'll be looking for on UJ is for us to get a break of the upside or a break of the downside, and I'd be taking my move once we get that. Right. So let's see what UJ has. And this is really good timing because it can clearly show you that it's between 2 p.m. UK time. So there's about to be some volume that will give us a good move, right? With that break and retest. Okay. So we're moving. Yeah. There we go. Nice. Nice push. Hold on. We got a break and retest right here. And that's our area to enter. So short position, right? Because we waited for the full retest. So now that price is literally here, I'd be put my stop there, right? And I'd be looking for a 1 to 3. I like 1 to 3 opportunities. There we go. Right? I'd be looking for there. So let's see how it plays out. Right? Make it directly 1 to 3 because we know we want to have some breathing space for our trade. All right, there we go. So we're in this one and see if we can get some profits going. Nice. There we go. Smooth. Perfect. And of course, profits made. Nice and easy. Look at that. If we had been, having an open TP, my God, that would have been beautiful. But we caught our 1 to 3. We're grateful because a win is a win and we made profits. So this is really something that you've got to look out for. Break and retest at the optimal trading hours. So anywhere between, your London opening 8 a.m. to 10 a.m. and that optimal trading time anywhere, especially where the overlap of the London and the New York session is, anywhere between 1 p.m. UK time to 5 p.m. good trading time. But if you just want to trade the New York session opening, I'd suggest that you stick to anywhere between 1:30 to 3:30 p.m. And of course, a lot of people don't know this, but a lot of these pairs have great volume at the same time in the morning, which is 1:30 a.m. to 3:30 a.m., especially on gold. Gold is really fire at that particular time, and you can catch good moves, right, on gold in that Asian session, right? Especially where we've got that Tokyo and Sydney overlap. All right. So literally it would have cost her 1 to 3 based on the break and retest structure framework. Really beautiful strategy. I'd suggest that you go back test it, you go employ it, and look at the trading time, right? A lot of people, they believe that, oh, the market is open 24 hours, I can trade whenever I feel like. But if you're scalping, it's very good to be in the market when the big ballers, the hedge funds, the banks, all of these financial institutions that are moving the market drastically, you want to be in there when they're moving it so you can take a piece of the pie from the market. You understand? You don't want to be there when there's low volatility, no liquidity, and it's barely moving, we're consolidating. We want to be there when there's some volume. You understand me? So your trading time is very important when it comes on to scalping, right? Very important. So I'd suggest these time frames that I shared earlier. London session 8 a.m. to 10 a.m., right? Especially at the 8 a.m. time, you generally get at the opening, you generally get good moves. New York session opening anywhere between 1:30 p.m. and 3:30 p.m. great moves, and you will see this progressing even up until 5 p.m. UK time oftentimes, right? So if you want to dabble into the Asian market, I'd suggest be on the go when it is the overlap of the Sydney and the Tokyo, which is exactly anywhere between 1:30 a.m. in the morning to 3:30 a.m. We get good movements at that time as well. All right. With that said, this is literally our 1 minute break and retest strategy. We can employ it on the 5 minute as well. It is a phenomenal strategy and it often works at this time where there is high volatility in the market. So your time is very important and you're just marking out your high and your low, waiting for that break and retest, getting in on the retest, having your set framework in terms of your risk to reward. Are you going to go for 1 to 2 or 1 to 3? Once you do that, you ensure that you're consistent with it. Always aim for that target and use tighter stop loss. So we've got a tighter stop loss here because we're getting in on the retest. Even if we wanted to drag this a bit, even while we're in the trade, that we could have clocked some more. You understand? So really and truly, you just want to ensure that you're taking the trade at the best time where there is volume to take you into profits very quickly. The aim of scalping is that you utilize your freedom. Trading is all about freedom. You don't want to be in the markets all day dilly-dally, and then by the time you look, you don't have time to do anything else. Trading is all about freedom, right? So you scalp, get some profits, be done for the day, and you come again tomorrow. So that's the 1 minute strategy. All right, I hope you found that helpful. Let's get right into the next one. All right, so let's get into our EMA strategy, right? Moving averages. And for those who are new and you don't know what a moving average is, it's really just some lines on your charts that kind of guide you in terms of how to perceive what the market is doing. In general concepts, the moving averages, they kind of show you the trending of the market, whether it's trending up or trending down. All right, you get that nice momentum flow when you use moving averages. So I'm going to be pulling up the EMAs, which is the exponential moving average, right? I use 2 of them, right? And that's the strategy that I'm going to be showing you. So with the 2 EMAs that we use, one is generally 20 and the other one is 200. So all we've got to do is to go into the indicators tab. And once we get into the indicators tab, we're going to add an indicator and we're going to be looking for moving averages exponential. So this one, okay? Right? So it's really just a technical indicator. And a lot of investors, a lot of traders, we use this to determine the trend direction. That's it. All right. So we've got 2 of them on, I believe. Let me see. Yeah, we've got 2. Oh no, I did the wrong thing. All right, so now let's go into the settings because we don't want them to be 9. We want it to be 20, right? For one. And the other one, we get into the settings, the length should be 200, okay? Now, let me just edit this so we don't have the same color. I'll put that bit in red. There we go, perfect. Yeah. All right, so we've got the 20 and we've got the 200. Now, this is a very simple strategy, and I already have a beautiful setup that I see right here. All right. No, very beautiful strategy. No, this is very simple. If we're looking for the optimal trading hours, so this is this is literally 7, 8. All of this move is 130 move, right? We got this from 130 onwards, right? Now, how do we do the crossover? So this is where we've got the crossover, right? Literally here. You can clearly see that we've got the 200 and then we've got the 20 crossing over. Now, this is a very simple strategy. Once our candles are now above, once they're closing above the 20 and the 200, it generally means that we're moving up, right? Now, here's the beautiful thing with this. I generally use it with what we call the Fibonacci candles. All right, so I generally use this with the Fibonacci candles. Fibonacci candles really shows a lot of, all of the momentum and all of the lovely things that I like to see. When it's green, it's green. When it's red, right? So now when I zoom in on this bit, I'm going to clearly show you what I'm looking for these crossovers. So there's a crossover here, but literally we're consolidating. So for me, I would wait until we get a break, yeah, of the consolidation. Hold on. And then I'll take the trade, all right? Now, even if I said, okay, I got a break here and I decided I'm going to take it, right? I'm aiming for 1 to 3, right? So once we get this clear break here and we're above, I'd be definitely taking the trade, right? So let's say we didn't get a real clear break here, but we got the break here. So for me, I'd wait on this retest and I'd be getting in on this long position right about here. Now, of course, you can clearly see that it would take me back into some drawdown, but I would have my stop below here because I know that there's a potential to come back here. So my stop would literally be below that area and I'd be aiming for 1 to 3, right? 1 to 3 as always. Now, literally, once I get this break here, that's generally telling me there is going to be some amount of volume that is gonna get me into profits. But I just have to be patient enough to get it. All right. All right. So this is like at 10. Right. So even if I decided that, listen, I'm not going to take the trade at that time and I'm going to wait until the 1 o'clock mark, it really doesn't matter, because at least I would be in this position if I'm watching the charts at this time. Okay. So it's very simple. Once you're above the 20 and the 200 EMAs and you're closing with some good volume, right? You can literally take your buy position. If you're below the 20 and the 200 with good volume, showing good volume in price action for downwards, bearish pressure, all of these lovely things, then you're going to take the sell. Now, generally speaking, for added confluences, you can add the RSI or the stochastic, or literally even the MACD to this to give you added confirmation to get into the trade. All right, you can have those as added confluences to kind of make you, if you're like a bit scared and you want some little indicators, you can put any of those on. Okay, but this is literally using the moving averages, and once they cross over, you're in that trade. And you're realizing that we got a crossover here, and then we were like low until we have risen, because that's how trading goes. We're gonna get some consolidation, especially pre-market, all right? And then you're gonna see at the optimum time, which is anywhere between 1:30 to 3, thereabout, you're gonna see price flying, right? It generally does. Now it may not fly all the time, sometimes it will dip, right? But in this case, we flew. So that's your 1 to 3. Right? And it's a very simple strategy. Now let's see if we got anything below. There we go. So I'm showing you now. Now we're below. Once you close and you're below the 20 and the 200, you get a retest. Once you get the break below, got the retest, you enter there, aim for your 1 to 3 and be done and out. Right? Because literally you could see here, if I entered here on my retest of the moving averages crossover, I'd be putting my stop a little bit there, and then I'd be aiming for 1 to 3 and be out. Right? So I want you to just understand this is simple concept. For you, if you're watching the charts, right? So this is London time frame, which is really good. Right? So this is 8. Remember, our times are 8 to 10. This is about 8. We got a break below the 20 and the 200. Right? We got a break below the 20 and the 200 with strong volume. Look at these high Kanashis. Right? Look at them. And generally speaking, once you've got them with them flat tops, price is gonna go down. Okay, it's gonna go down. This is a lot of volume. So you get a pullback to the moving averages crossover. That's your entry point. You enter there and you take your 1 to 2, take your 1 to 3, and you're done with it. You've literally made profits. All right. All right. Now, even if you say, okay, all right, I've clocked that one. Now I'm waiting again to see if we're gonna be above or below. Now look, we came here a little bit above, but look at this huge wick rejection. The rejection alone says that, oh no, we're going back down. This wick rejection is massive, and that's why it's always very important for you to wait until a candle closes before you enter a trade, because it tells you everything. If I'm just waiting patiently here for a break above the 20 or the 200 and I see this extremely long wick rejection, that's telling me that price really doesn't want to push up. It wants to go back down. Right? So what am I now waiting for? Sorry. I'm now waiting for price to close below. All right, close below, and literally I'd be entering there. Once we get a retest of this area, aim for my 1 to 3. All right, on my short position, when it comes back here to that area, and I'd be aiming for 1 to 3, quick and fast. Even if I wanted to pull that bit up some more. Yeah, and that's literally it. So this is really effective, especially at the optimal trading hours, because as you can see, this play came when? At 3 o'clock. This one came in at 3 p.m. This one that we took earlier was when? At 8 a.m. in the morning. So pay attention. All these Forex pairs, you want to be trading them at the optimal trading time. Okay? Optimal trading time. Very important. So that's literally 2 moves that you could have got as a scalper and be done for the day. Yeah, you don't need more than 2 of them setups. Be done for the day. That's lovely, right? No, that's literally your crossover. That's literally it. Yeah. Now, let's say we want to test this on gold for those who love trading gold, really love trading gold. All you be doing is let's change it. All right. So I'll go back to the gold chart that I had for the 1 minute, but I'm now gonna go to my 5 minute because we do this bit on the 5 minute. All right. Now we would need our EMAs. So we're gonna go with moving averages, exponential. And remember, it's 20 and 200. Okay, so the input, the length, 20, and the other bit is 200. We changed the color for the 200 so that we can differentiate. So we put that in red between the two. Okay, so look at this one. You got a break above, retest, literally get in for your trade, your buy trade right here. Look, we're above the 20. We got a crossover. Yeah. Even if you waited for this, crossover, and we're going. Right? We're going. So you could literally say, okay, let me take this buy. Even if you waited until you got the engulfing and it closed, you could take it right on the same mark here. You don't need such a big stop, right? You aim for your 1 to 3. Yeah. Aim for your 1 to 3, and you'd be done and out. All right. You'd be done and out. Even this one that I showed you on the 1 minute, you could have gotten an earlier entry here once we're below. So now we're below. You could have taken your entry even earlier and captured more profits. Right? So that's something that you could have done. So this was the break and retest. All right, you could have captured some profits here. Aim for your 1 to 3 and be done with it. Now, if we're in between moving averages, I'd suggest not taking a trade in between. Allow it to be above or beneath, close above or beneath to give you high probability setup. That's really what scalping is about. You're looking for the highest probability setup. You're not forcing a setup. You're not making up things. You're literally acting on the behalf of what the market is actually showing you. Whatever the market shows, that's how you react. You're going to react according to what it gives. So here we're below, nice volume below, right? I'm just showing you the opportunities that lies here. So look at this strong volume here. Once this candle closes, I'd be in it to win it. Okay, in it to win it on a short position. Enter here. Aim for 1 to 3, wherever 1 to 3 looks like, right? Aim for that. Sometimes you'll get 1 to 2. It doesn't matter. You take your 1 to 2 and you get out. It's fine. Okay, that's fine. All right. And you'd be in profits. Okay. So what I'm saying is, and this is at 2, this is literally at 1:30 up until 2, you'd be in this trade. All I'm saying is the crossover, you're looking for these times where, you know, trading is really volatile. You've got some liquidity to take some money from the markets, and you just, you know, capture these moves and pocket all the profits. So this is the moving averages, right? Literally, this is our moving average crossover strategy. Once we get a crossover, we get a break below. We can use this with the Fibonacci candles. You can also couple it with your RSI, your stochastic, your MACD. Any of those indicators have added confluences, right? But literally, a lot of, you know, there's a lot of opportunities with the crossover, right? So we get a crossover, right? This is a crossover here, and from here we literally rose quite a number of pips, right? Over 200 pips. So you wanna ensure that you're looking out for things like these. If you're a newbie trader and you want a strategy, the moving averages crossover is really effective. You're only looking for a close below the moving average, right? With good volume meaning that we've got some huge candles, right? And once we get those, that's our opportunity to get in on the trade. All right. So we've got the breakout, which is 1 minute or 5 minutes. Now I've just shown you the moving averages, crossover with the 20 and the 200. Now let's get into the final strategy that you can use to plot profits when you're scalping the markets. So this strategy is literally what we call our RSI and our stochastic strategy. Now this one is fairly simple. We're looking for overbought and oversold areas, right? In correlation to a trending market. Okay, so with this one, I generally leave my 20 moving average on, just the 20, right? And now I'm gonna pop on the chart the RSI. You can use the RSI, the stochastic RSI only. But if you want to add the relative strength index, then perfectly fine. It's a combination, because guess what? They both have to agree for you to take the trade. All right? They both have to agree. Now, it's fairly simple. Your settings on your RSI are the regular ones that you've got. These are your inputs, 3, 3, right? For your KND length, the only thing you're changing for the 5-minute time frame is 5 for your length and your stochastic and RSI. So we'll pop this on the 5-minute chart. There we go. Smooth. Okay, perfect. Now, what it is that we're looking for is if we are in an uptrend, so this is UJ. Once we're in an uptrend, we're looking for our stochastic to show us, right, that crossover at the oversold section, okay? Or to show us a crossover at the overbought section, right? And once we get that indication, we're generally going for either a buy or a sell. So in this scenario here, right here where we got this crossover, as you can see, literally the RSI was actually in correlation with it as well. We got a crossover at the same place. So what are we going to do here? Literally, or 20 moving average, we're above it now and sitting above it, which is perfect. So that's 3 confluences. We're in on this buy, and we're entering once we get a break here where it is. We're going for the buy right at this area, and we're aiming for 1 to 3, wherever 1 to 3 is. All right, we're aiming for 1 to 3. So there we go. Right, aiming for 1 to 3. And we just take our profits and get out. Yeah. All right. So literally what we're looking for is where we've got these opportunities, yeah, of crossover, we're going for the buy. Now you want both of these things to agree alongside price. If it's showing that you're oversold, for example, if we're getting an oversold signal and the RSI is not backing it up, everything has to agree, right? Everything has to agree. If it doesn't agree, then we're not in the trade. We're waiting on the optimum opportunity for everything to be in agreement. All right. So if we take a look right here, right, where we've got a crossover just at this area here, right, literally, right, you'd see that we were consolidating. Okay, so we didn't even have to say, okay, we want to get in there. You're looking for optimal trading opportunities, and you're looking for the time. So this time, that's why there's not a lot of volume. You're looking for the time. What time are we looking for? If you look to the bottom section of your chart, when you're back testing all of these, it will show you timing. Okay, so we're looking for that. This is 5 p.m. Look at all this selling volume. 5 p.m. We got that crossover and we just kept going down, right? Okay. All right, we're going all the way to here. Perfect. This is where we had the consolidation bit. And literally now we've got overbought area here, right? Overbought. Okay. And with the overbought, that's telling us that we want to sell. And listen, the RSI is backing up everything. Now, where are we on our EMA? We're actually just sitting right on it until we're now below. We're below. Okay. We're below. So what do we do here when we're not agreeing? Because literally, if I put a vertical line, right? But what you're really looking for is everything to agree, right? We've got to be, if you're taking a sell, you've got to be below the 20 moving average for the sell. You've got to be overbought on the stochastic at the same area. And of course, the RSI should be showing you, that listen, we're moving down. We're moving down. All 3 backed up, you take the trade, right? You take the trade. So we're looking for, and you don't have to, for people who don't like the RSI, can literally just use the stochastic with your moving average. Okay, you can. All right, so literally you're looking for price to be in agreement with what you've got as your added confluences to be able to take the trade. So let's look on another pair apart from UJ with the stochastic. Let's see, what pair would we go for? We can go for a GBP USD. Okay, let's try that one. All right, GBP USD. So I love this. All right, so we're on GBP USD. Now look at the stochastic. Stochastic is showing us that we're overbought. bought. So there's a potential for a sell opportunity, right? So once we get that nice crossover, right, there we go. That's the dip. I'd be in on the trade. All right. So short position, could take it here and put our stop there. And we're aiming for our very 1 to 3. That's our thing. Okay. Now we could potentially come even here, potentially, because we were having support there before. So I'd literally be aiming to catch that 1 to 3, maybe even 1 to 4, right? Because we could come back here. All right, because I'm looking at what the stochastic is showing, right? And we're getting some pumps. Look at that. Look at that. Okay, and you'd be trailing your stop. So even if it doesn't go all the way to your TPs, just ensure that once you're in the trade, you're trailing your stop to protect your capital and to protect your profits. But chances are we're gonna come back to this area of support and possibly, push back up or break it. There we go. So we've been smashed out. We got a liquidity sweep. So we've been smashed out, right? Take profit hit. And literally the stochastic gave us that area of entry. All right. So you want to be looking for those key areas that it's giving. All right. When it's giving, when we're overbought, yeah, then we'll take that sell opportunity at the right time. Look at when I took it. I take it when there is volume in the market. This was at 2 p.m. So it's very important for you to understand that, listen, we want to be in the market when there is volume. So the time you're trading is very important. Okay, trading time is very important, right? We got the indication here on the stochastic, and as you can clearly see, we've been pumping up. So if we had a 1 to 3, we'd be getting it in our favor right about here. Right? So the timing is everything. And if you've got to develop a plan to be on the charts same time every day, then do it. Right? Observe price. See what price has been doing at this particular time each day with your currency pair that you're trading. That's how you're going to know if this thing actually works. So go back, test it, go document it, go write up your journal on it, right? And do all that you have to do, because this is a process and it takes time to get to the level that you want to get to. It takes time to get there, but in getting there, just do the right things and follow the process. All right. So I do hope all these strategies that I've given to you are really helpful. I really hope that you're going to go back test them and see that, listen, I've given you some great gems. So hit that like button if you're appreciating the content and the value that I'm, spending quality time to make for you. Just drop a like, drop a comment as well for whatever it is that you enjoyed mostly in this video, or let me know which of these 3 strategies you're gonna be employing within your trading, or you're gonna be back testing. Let me know. I want to know which one are you gonna be using going forward, right? And then I also want you to put in the comments whatever it is that you're struggling with as a trader, that you'd like me to discuss in my next video, and I'll definitely work on that for you. With that said, we have come to the end of the video, and I really want you to understand that trading is a superpower. And when you get this superpower, God will allow you to win incredibly, but you've got to put the work in. It comes with a lot of work that you've got to put in day and night. Sometimes you may not even sleep. I've been there, right? Just to study the market, study the ebbs and the flows of everything, just to make some profits. But honestly speaking, whatever you focus on, it grows. So focus your time, focus your energy on getting this right, and trust me, your life will never be the same again. right? Understand that it will take some work. Just put the work in, man. No complaining. Just do the work and you will get the rewards in the long run. So with that said, I really hope you enjoyed this video. Let me know your thoughts. Drop them in the comments down below. And I will definitely see you in the next video. But listen, remember this. Put God first in everything you do. And listen, the victory, it already belongs to you. You're a winner. You're a star. This is your skill. Own it. Do all the work that you have to do to get it right. Put the effort in. And remember, if God is in it, you must win it. It's inevitable for you to win it. With that said, I want you to walk good, and I'll see you in the next video. Bye.